I actually sent him a bunch of screenshots from the last live and didn't
Yeah,
hear from him, so he hasn't
yeah.
been in the chat since
I'll
then
I'll
either.
check in on him. I'll check in on him because
Yeah.
life's busy. Life is busy. Right. Where do we even begin? Right. We'll come back to this here now because when you start to realize that um, the whole thing about trading is balanced price ranges, right? Price is always seeking to go to liquidity or rebalance um, imbalance that was left in the market before it can leave a range. So even though it may have moved up here like this, there was this tiny little FEG, and you know that I like when price taps an order block. So if it didn't tap the order block here, then I would have waited for it to come and tap the order block there. Right, we'll just make it darker for now. Right, we always want price to tap the order block. So often you'd see setups where price does this, right? And there's your order block sitting here in time. And then suddenly it goes up here. So it totally misses your order block. And I've gone through this before. So one of my key non-negotiables, you can call it, is that price should touch the order block, right? There's only speed once price taps the order block. So what happens here is as soon as you break that high, then you get a whole lot of guys FOMOing, going long, thinking price is going higher, right? And then suddenly you get something like that touches the order block, takes liquidity here, pairs any orders, grabs any orders here, and then starts to continue. So price touching the order block, very important. Now you'll see it all the way over here. When I posted this the other day, none of this price action, so let's call it here, none of this price action existed, right? Yesterday, I think this was yesterday. So there's the FEG. So there's the FEG down here. There's the line for the order block 22,741.60. This was what I was talking about, where you get that middle sort of leg, and then still no taps into the order block here. And coupled with that, we have a long wick down here. Now, what I want you to start to see is that wicks, the 50% of a wick, you can treat it almost as an order block, but we'll call it a rejection block, right? Because when price comes into it, it should start rejecting out. And what we generally want to do is 50% of the level, which I have marked off here, 22,624.40. 50% of wicks is considered fair value. When I say fair value, it's fair value for buying or fair value for selling. Take any wick. The wick made here, for example, was fair value for selling, right? So if we had to have marked that wick out there and marked off that 23,321 level, you'd see that these wicks become fair value. Think of it as premium and discount, right? So in this case, it would be premium end of the market for selling. And at this point, because the order block wasn't tapped and we engineered all of this liquidity up here. So if you remember what I just drew for you there, price will want to do that and take all the liquidity resting below here. It serves as inducement or liquidity engineering, and then price would then start to reverse. So come back to real time. Right, this didn't quite hit the 50%, but in this particular top, we had a 1 minute imbalance here. Right, so all we had to do was figure out where the market structure shift happened. So if we had to run buy side here, this would be our zoom model forming here. Anything below here, this level here, right? I'm going to mark it off as an FEG as well. That level there becomes the FEG that led to a shift in market structure. So if we pull that out in time, as price tends to come back to it, on higher time frames, you'd see that it should start respecting it, and any closes above immediately come back below. So this FEG that we had on the M1 actually became an FEG to sell. And the target for that was obviously all the way down here. We're looking to tap these relative equal lows that were created. I marked these off for you. These will act as liquidity, relative equal lows. And if you don't believe me, let me show you something else on NAS really quickly that led to the reversal all the way down here. All the way down here on NAS to the left side of things. Let me just mark, let me see if I can find it before we do anything. It could have been here. On an M5 we had some relative equal lows down here somewhere, right? It was, I think it was at this particular point, it was here, right? On an M5 you'd see these were all relative equal lows, and that's liquidity for the market. So when we start to see things like this, relative equal lows, we've got a long wick, we mark off 50%, we mark off the relative equal lows. You can see I have it marked off here, relative equal lows, and 50% of that wick is fair value. You can see how price tapped the relative equal lows and the 50% of that wick and then reversed. So now we started to form our zoom model, right? Where we had the accumulation phase, we had a failure swing because it failed to go much higher, and we always look for the OLR, or the open liquidity run, that was there. This low that was created in the zoom model should stay in the market. It should be untouched if we are to see any higher pricing. And then what we got was this high here. If I draw it out in time, price, if this is the zoom where this is the accumulation, failure swing, open liquidity run, this push up here, you can see didn't break the failure swing high, right? So at this point we're thinking, fair enough, we got a market structure sort of shift here, but the delivery is not what we want to see because we didn't take out the failure swing high. So when price retraced here, then took it out, because of this sort of delayed delivery. Remember, in the zoom model we need accumulation, failure swing, open liquidity run, a push that takes out the failure swing high, and then we get the retrace, right, before continuation. Now if this push didn't take this failure swing high out, it retraced back in here and then went up, this delayed sort of delivery opens up raids of the order block. See that? So that's most likely what happened there. We didn't get the delivery we wanted to see here. Had we broken this up here, this would have just been okay, and then that would have been the case. But not breaking that failure swing on the first push up, coming back and then going, it opened us up to this, right? So now we look for price, and in this whole range here, if we switch it up just to one higher time frame, I'm going to get rid of all this now, we don't need it. If we switch up to, I think, H1 in this particular range, you can see this becomes a balanced price range. And if you remember me saying that what we want to see in bullish order flow is the price range being balanced before it moves away. So once you start to see things like this, Sloth would know, this wick down that happened here, right? And we'll make it red. This created a balanced price range which should act as a brick wall for price, or support price, from going below. Because what this wick here did was balance any imbalances or rebalanced any inefficiencies in that leg from here to here. So now if we're treating this as a BPR, as a balanced price range, and we're expecting higher pricing, then all we need to figure out is where our entries would be. The first entry, I still hold true to the first entry formed here, right? Your second entry formed here where I gave it to you earlier on an M3. On an M3 it was somewhere in here, right? Or you can check one of the tweets. Now this acted as liquidity. Order block took liquidity. So order blocks forming in liquidity in a zoom model is what we want to see. So down candles forming in liquidity. We got that. But at the back of our mind, we know there's always a chance of this happening because of the delayed delivery that we had happening here. So your stops are only going to be safe below here. Nowhere else. Now, had I put my stop back up into break even here, which I thought I did, this would have taken me out. And this is why I'm stalking a new setup here. Price moved away. We've retraced more than 50% of the spike down, so we can consider that sort of market structure shift. Visually, it should be more than 50%. Now, we need to rebalance and tap the order block. There's the order block being tapped again. There's the inefficiency in the gray box here, above a previous FEG that's been holding price. Stop still below the initial spike down here. Now we look for price to change the state of delivery again, because it went from buy mode here, buy model, sell model. Now we need to start changing the state of delivery here, trading above down candles and previous highs would confirm the change in the state of delivery for us, and then we can, there'd probably be a better entry as price starts to break highs and leave FEGs behind. You'd find that when price comes back down into the FEGs, this will turn into your low risk buys, right? So we can watch out for those as well. Now let's go up. Let's go down to where I entered and why, because the whole week I've been doing this for you guys. Let's go M15. So this has been the whole week, and at this point we knew nothing about anything, right? At this point it was all the way, in fact down here we had marked off the 10 a.m. price that we wanted as the drawn liquidity. So there's a magnet there because of the imbalances created within here. Our entry formed here. If you look at M15 order block, this was M15 order block here, which led to higher pricing. So that's a good order block in my opinion. And the mean threshold of that order block being the 50%, take it out in time. We marked off the line here, this line. This becomes a low risk buy in my opinion, right? Your stops being below here, because if we started to get zoom model forming in here, then the stops are going to be below here. So once you get that tap, you don't have to take things blindly, because we try as much as possible not to trade the level blindly. It's not the level that we trade, it's the reaction to the level. So once you start to see things like this happen, then all you need to figure out is, were there any FEGs created in that down candle move? Right, any FEGs created in here, and the opening before the liquidity run was here. So if I draw this opening of this down candle here, or the lowest closing down candle, it could be here even, right? This is where your entry is going to form. So once we get the change in the state of delivery moving, trading through, so change in the state of delivery is basically when we're moving from sell model to buy model. Now, if we are still going to be in sell mode, then down candle should not be traded through. You can see through here, and down candle highs should not be traded through. So if this was a series of order blocks, price didn't trade through any of these here going up, right? But the moment we start to trade through down candle highs, so in this particular green candle here, traded through the high, this confirmed this guy here as the order block. This guy came back and did what? Because we didn't have any touch of the order block, it tapped the order block, which is what we want to see. And if this is the zoom model here forming, right, we're expecting the retrace. This could have also been the retrace on the wick down. The market structure shift happened on the lowest closing down candle. We take the opening price of that, draw it out in time. That's where your entry forms. If you still don't want to take that blindly because your stops are going to be below here, we look for second shift in market structure. That is down candle highs being traded through happened here. Previous FVGs that rebalanced price being traded through, that happened here. That's a shift in market structure from sell mode to buy mode. Either take the candle here that closes above the FVG or wait for the retracement. Simple as that. So we went from low risk buy here, and then we went into new highs. And like I always say, FVGs created, let's go M15 so we can have a look a bit better. FVGs created on the break of highs, so highs being broken there. FVGs created, it's this here to this here is an FVG. When price pulls back into it, it's buying. Stops below the order block, should be safe, right? The order block that led to the move up. Price moved away, FVG created again. There's your FVG here, marked off here. When price comes back into it, we are buyers again, and then this turned out to be one big reaccumulation model. So it came back twice. It normally doesn't do that, but it gave you a second opportunity and took liquidity here if you were silly enough to have kept your stop here because price moved up here. You saw that it took you out here. It even offered even offered you an entry in here, believe it or not. Two more entries in here in the reaccumulation model. So you can see here, this here didn't tap the order block here. So if we draw that out in time, where does that happen? Here. So when you start to see that, always be aware that if the order block is not tapped, and we only know the speed when order block is tapped, or price trade in this case, when price trades to a down candle high. If this didn't do it, then this is going to serve as inducement. Same story again, inducement, liquidity engineering. Price started going higher, people started FOMOing, putting their stops below here, and then you get this move down. What does it do? It takes out these guys, takes the liquidity, taps the order block. Then we need a change in the state of delivery to confirm that price is now moving from sell, market maker sell model to market maker buy model. We look at down candles forming, price trading through down candles and giving us a market structure shift. Any retracements back into the FVG is a buy. If you still didn't take that one, then there's always opportunities. Highs being broken, leaving FVGs there. There's another entry in there. So there's never a time where you should FOMO in or think that you won't get an entry, right? So this would have been a low risk buy here, in my opinion. Once we confirm market structure shift, low risk buy in here, accumulation in here. There was an FVG created in here on a lower time frame. You can see price pull back, shifted up, and so on. So you get the idea. Low risk buy, FVGs created, accumulation. Now at this point, I'm thinking this move down here, okay, it was violent enough, but from experience and just hours on the chart, it's not good enough or big enough. Had it taken this low here, then I would have been more on board with the fact that this created a dealing range, and then price pullbacks should give us a short opportunity. But seeing that order flow is bullish and has been bullish here all the way up here, I'm not about to catch any try to catch any tops while shorting. Couple that with the fact that if the draw on liquidity is higher, and we're going to talk about this now, right? If we expect the draw on liquidity from last week's live stream, where we from the wave count, we assume that wave 3 was down here, and all of this is some A, B, C kind of flat correction in the bearish count, where this is an A, this is a B, and then we're putting in some kind of C wave in here. Then the draw on liquidity is any FEGs created here, in here, right? Or order block lows, you can see there. And if we couple that with price swing grading, so we don't know what's going to happen, but we know where the draw on liquidity is most likely going to be, because if you remember me saying last week that those guys that long down here, they need to sell to someone, and those happen at old highs. So this is on the menu, this is on the menu, this is also on the menu, and they need to sell to a place where no only sell side was offered and no buy side was offered. Those happen in FEGs, where you get sell side inefficiency, buy side imbalance. So we need price to come in here, because in this area here, there are willing buyers above market price who are willing to buy because no buy side was offered in these FEGs previously. So this is where we need to target. So if we know the draw on liquidity based on Elliott wave, right? We know the draw on liquidity is here. I'll take the daily order block low there as a draw on liquidity. Then we can start to grade the swing. Grading the swing, 0, 25, 50, 75, 100%. 25%, you can see here what happens. Price stalls, retraces, and then off to the races. Through the 50% level, two things are going to happen. You are either going to see stop runs happen around the 50% level, which means whatever range was created here will take out buy side, take out sell side. It could do that a number of times and then start going through to objective. Or you are going to see at the 50% level, FEGs being left below it and FEGs starting to be left above it. That's the speed through the 50 level. So if we start to see speed through the 50, then the 75 being the next level all the way up here, this is where we are now going to start seeing stops happen here. So stop runs around the 75 level and then finally objective at 20, 28.6, 28.5. Now, expansion. So we had original consolidation at the bottom here. We took the 50% of the consolidation range. From consolidation, it led to expansion. Expansion seeks order block, so any of these order blocks, but we know in particular we're looking for order blocks all the way up here. That's our draw on liquidity. So the expansion phase would seek an order block all the way up here. That's where the draw on liquidities, that's where we're targeting. There's the checkered flag there. Once that's complete, there's a possibility that from expansion we start to see retracement, and that retracement will then start to fill in all imbalances created within here, and whatever happens in here. Balance the range, and because this was a consolidation, we know consolidation seeks equilibrium. A consolidation range would generally bounce off the 50 and then return to the 50 before carrying on. So if this was the 50 level, you can see price bouncing off the 50 level here and then going away. And we expect consolidation to seek equilibrium. If expansion seeks order block, consolidation seeks equilibrium, then we'd want price to come back down here and take that out. Now, some other mad science we've been doing over the past few days was, let's have a look here if this is it. Right. So this became, let's get rid of that, and that. So we're looking for price to move now from the sell side of the curve to the buy side of the curve. We see the market structure shift at the bottom, starting to look like a smart money reversal. All of these little boxes here are voids in time or distortion in time, where I don't consider as an experimental sort of thing. Theory, we don't consider this to be real price action on a high time frame. So voids left here should start to fill, and you can see there's one all the way up here at 44, 43. There's a tiny little one up here, and then those coincide with the conversation that we had about this being a wave 2 here, and then the high having this imbalance in here, coming back and getting filled out there. So if price is moving from sell side of the curve to buy side of the curve, there's two levels I'm interested in. I'm interested in price from the all-time high to the bottom, giving us 50% from the all-time high. And then I'm interested in 50% of the most recent energetic drop down, which is from this guy here. Let's take off the opacity. The most recent or energetic move down was from here to the bottom, 50% of that level. So those are the equilibrium levels I'm interested in to see any reactions. This coincides, believe it or not, with the 27-28K level. So expect reactions around this level here, 28, 20, 27, 28, 29. Anything above that, if we don't get any push down here, because remember, whilst price is moving up here, on the experimental side of things, there is, let's see, object tree, where can I find you? Yeah. Current price action is also in a void period, which means whatever is happening in this particular period, just like whatever happened in all of these other periods, I don't personally consider it to be real price action. So whether it's distorted price action, manipulated price action, whatever it is. Now, if we take away all of the distorted times here, you can see how price is now moving more fluently down, as opposed to when you had all of these levels put in and distorting. So whatever happens in here, not real price action. So the possibility is that after we get the drawn liquidity up here, small chance we come down to fill any imbalances back to 16K. I'm not going to keep my hopes up on it. It may leave the void open or the imbalance open here and then just carry on pushing up. But you can see here that this is where we want the zoom model to start forming now, right? So if we start to push up here, once we got the OLR that happened here, and this is the push, our expectation should be for a retrace to then do that, right? So if you think you missed out, you probably didn't. At 28K, two things will happen. We are going to see that wave 4 that we spoke about, right? And if price wants to do that, very well. Or we are going to see a reaction here that only comes down here, and then it does that, as opposed to this being a wave 1 or a wave of the next leg down. So this level here now will become important, because not real price action, but also there is real price to the left of it, which is all of this. So it's not really a void in price, as opposed to this PA that happened here, where price opened up here and then closed here, leaving all of this as a void in time. So we'd look for price to come back and fill that. If you don't believe how this works, let's go take a look at what happened at COVID price levels. Here we had session void time here, session void time here, all of these being session void times. And where did the COVID dump go to? If we take this little guy here, the opening of this void here that I have here, the opening of that void was here. Where did COVID dump go to? Let's darken that up. There. Right? Almost too perfect. There's no other voids left below this price action here. I was actually afraid to look at anything before 2017 because there may be something much lower, but I don't think that happens now. But what it also did leave behind, as much as it left voids above us, it left voids below us, because COVID on the move up, we had this bit of price action here, and then it opened up back in this price action here and didn't quite fill that void up here. This guy opened up here, price pulled back to the premium array there, and then started to move. We also have this as a void, 16K. So let's take a look at where BTC stopped on this actual move down from the all-time high, right? So we know that around the 7K level, void time, void price, at some point we want to come back and fix that up. Now with 28, so not 28, with the drop down to 15 or 16K here, where did that come down to? It didn't quite fill a void either, but it came down to the opening price of where we left off there. See that? These levels work as support and resistance and will hold a market up or act as resistance to send it down. So there's something to it, very experimental at the moment, but the possibilities are great for the draw on liquidity if you want to know where price is most likely headed to next, right? Now if
So
price,
Poison,
yeah,
real quick, not that we need to be holding our breath for this, but it's funny because that December live stream you had, December 12th, for those of you who are new on the call and want to check one out, but the December 12th, there's a lot of Elliott wave theory discussed with high time frames and stuff.
yeah,
That 7K to kind of 65K, that void down
Yeah.
there, as that was
that
our
was the
initial
target, right?
target for wave 5,
Yeah,
based on wave 4 going up to around, we called 27, 28 back then,
yeah.
even before this move came up.
So I remember it because remember at the time we started doing live streams again, right? Let's zoom into this just a little bit here. And that comes from a place where I don't want to say we're using patterns, but it's just how price moves or how price is delivered. So let me get rid of this for just a second here. I'm just going to bring that down a bit. Price delivery, price breaking a low, leaves an FEG behind. What happens? Price comes back into it, this spike up, takes liquidity here into the FEG, and then makes a new low. While doing that, it made a new FEG here. What happens? Price comes back, fills the FEG, breaks down. So this at the point or the time was still in sell mode, right? Sell model. Let's get rid of this guy for a bit, bring him down. Now, if we know from market structure shift theory, once we start to trade above previous price that was rebalanced, so if we had traded above this FEG, we'd start to get bullish there. Same story if we had to trade above this FEG, it means market structure shift, we'd get bullish there and not look for any sells. It's the same theory where you had this FEG in here and price has gone straight through it. The red line that I have here, you can almost see it if you put this in, cut this in sort of half down the page, you can see that price has now moved from sell model to a buy model, right? Now in buy models, we're not interested in any sells, we're only interested in the retracements that can give us positions to go long. So don't get confused, don't get clever, don't be a hero. Heroes die young. Don't try to find a top or sell everything. If you know where the draw on liquidity is, and in this particular case we're saying all the way up here, why are you going to be trying to short here? If you shorted here, you saw your ass, you probably got taken out there. You try to short here, you're getting chopped up. Price is most likely going to do that because this guy is on the next menu and all of this is on the next is on the menu, right? So heroes die young. Don't try that.
And this is the other thing that I'm always struggling with, because we're currently in a weekly OB, right?
Yeah.
So I'm always like, is this the OB we need to be concerned about? Why is the one higher up the one we need to? And I know we're doing
Right. So it comes down to, yeah. So let's go to a weekly, right? It comes down to one important thing that I'm going to tell you that I haven't told you before, right? And once you start to see this, so you're saying, let's go here, right? So we're saying this green candle here is the OB, right? Let's make it extreme OB, right? That's the OB. If we were to get, just like this was an OB, right? Just like this was an OB, you agree? At that time, we didn't know that price was going to shoot through this guy here, did we? We didn't. Now, with an order block, what you need to be aware of is the 50% level of an order block, or the mean threshold. Just like we did with Wix, the 50% or the mean threshold of an order block is going to give you all the answers you need. You want to see reactions at the 50%. As soon as price starts to close above that 50% and F around, that's your sign, get the hell out of there. Because the 50% should not be traded through on that order block. If that's a good order block, we're not interested. Secondly, if price has turned from, if we were in sell mode only, right? Still in sell mode, none of this price action happened, then there's your weekly order block being tapped here, you agree? And price moved away. Now, that's in sell mode, sell model. But in buy model, bearish order blocks mean nothing. If you are in buy mode or in a buy model, what are you interested in any bearish order blocks for? These are all going to be liquidity for you to take. We're not interested in bearish order blocks in a buy model, just as we are not interested in any bullish order blocks, anything created wherever, in a sell model, because those will all be liquidity for price to take. You agree? So that's just something you need to be aware of. Two things: we aren't interested in bullish order blocks in a buy mode or bearish order blocks in sell mode. And if the 50% of an order block gets traded through and you are thinking it's still going to hold, save your stop, get the hell out of there. Makes sense?
This sell model, what you talk, what is the confirmation for this?
What's the confirmation for a sell model?
Yeah, no, for the buy model.
A buy model.
Yeah, you say we can't now watch, we are in buy model.
Simple. If you remember, when we were all the way down here on one of our very first, we were all the way down here, right? You remember this?
Yeah.
It's starting to look familiar. All the way down here, all the way down here, I told you, when price starts to trade above down candle highs, so let's take away this guy for a minute. When price starts to trade above the highs of down candles there, and through FVGs previously created, that is a market structure shift and a bullish order block confirmation. So we confirmed the order block here when we traded through it, and when we closed above here, which, believe it or not, was this little wick here, that confirmed a market structure shift. So what essentially that gave you, al dente, was the market structure has shifted. It's telling you in advance the market structure has shifted from buy model, from sell model to buy model. All we needed to do, and what we were actually looking for this to come a little bit lower to the weekly price. If we were on a daily or lower, we're interested in price tapping the order block there, right? Tap the order block, get some speed and move. So you're interested in price tapping the order block. You are interested in discount entries of the range that was created. So if that was the range on a daily here, because remember we said order block confirmed here, price closed above this FVG, that's a market structure shift. You could have either, if you had big pockets, taken a buy immediately here, because we don't know whether retrace is going to happen. In this case, retrace did happen. You are interested in the 50% level. Look at that. This is you buying in discount. Right. So let's keep all of that. So that's why I say when FVGs that were bearish or rebalance price previously are getting traded through, that's your sign to get out of any sells and look for buys, because that is where market structure shift happened. Now say we didn't know that this little early market structure shift theory or model, right? We then say if price traded through here, was a change of character, and then that's the break of structure there. So in this here, we then start to look for buys in there. Let's keep this guy on here and go to a lower time frame and see what could have happened down there. Right. So if retracement, if we had our dealing range created here now, there's it here, right? This was from a daily point of view. This is the 50% level here. This line here is the daily order block that needs to be tapped. So we want entries to form around there. And if retracement seeks imbalance, then what are we looking for? We're looking for any imbalances. Let's go H1 and see what we can find. So if we had an imbalance in here, wouldn't that be a good place to enter? It's below the 50%. It's in discount. All we needed to do here then was to see whether there's a change in the state of delivery from selling to buying. How do we figure that out? Simple enough. We look for a zoom model. So you would have went even lower on that time frame. Let's go M15. Here we go, right? So we're here now. Price tap the FEG below. There's our daily order block up here. The change in the state of delivery happens when there's a market structure shift. Here is the real low in the market, right? Lowest closing down candle. Here. That is where your entry will form. Can you see? This was the real low in the market. There's your failure swing. There's your open liquidity run here that takes the liquidity below here, right? So we consider this guy to be the real low in the market, and that is where your entry will form. Come over all the way to the left. If price is coming back into there and there, I'm going to be a buyer in there, and my stops are going to be below there. I can buy that level blindly because I know if my risk management allows me to, that my stops are always going to be below here, but this is where my entry should form. The real low in the market before the liquidity run down here is this guy. Now for us to confirm that, we need down candle highs to be traded through and give us market structure shift. For market structure shift, we need FEGs, right? On this 15-minute time frame, we don't have any FEGs sort of created in here. In the absence of an FEG for market structure shift, we'd use the real low in the market. We'd use the opening price of that. When price closes above it, we consider that a market structure shift, coupled with the fact that this down candle here was traded through here. That confirms this guy as an order block. So if we make this guy a few levels lower, and we know we want price to tap the order block before speed is created, mark the order block off. There's he here. Let's mark him off in red, make him a bit bigger. We know we want price, so that level now is coinciding with the level that we want the entry to form based on the previous real low in the market here and here, and is also an order block high. ICT, I haven't done that yet. Right, so now can you see that? So if you're not buying blindly, what are you going to be looking for? Because we know that accumulation, failure swing, open liquidity run, push, we are looking for the retrace. If you're looking for the retrace, then there's your dealing range. You're only interested in price in discount. That means you'd only buy below here and here, which coincides with what? The area that we wanted to buy in. Get it, al dente?
Okay.
Let's add one more thing to it. Are there any FEGs created at the 50% level? Our luck, there is. There we go. FEG. is the FEG being, what's the word? It fails me now. Is the FEG holding? Are there any candles closing below it? No, they aren't. Respected, right? That's the word. FEG being respected. Entry forming. Now, put this all together in your head, right? Because maybe we have to make a model that you need a checklist for. Market structure shift. Order block. Real low in the market. FEG. What more do we need? And price, obviously, in discount. 4 things. You check all of them. We're good to go, right? Your stops are always going to be below here. Now, say you are more risk averse and you don't want that to happen. So you don't trust the early market structure shift model that this is. You want something else. Fair enough. Let's get rid of this. Let's get rid of this. Let's get rid of that. Let's get rid of this FEG as well. Down candle. So this is still in sell mode here, right? Your confirmation is a change in the state of delivery. Down candle highs being traded through and FEGs being closed above. So this order block was confirmed here. In this candle here, we traded and closed above. The very next candle is a buy. There was a small possibility you could have gotten that. You could have bought there. But when you get a market structure shift, the very next candle is a buy, or at least partial entries, right? Because if you're buying here, you understand your risk that there's a chance price can do that first and then do that. That's your second entry forming there. Right. It'll start to come together. It'll start to come together. Then again, M15, let's go H1 in this particular range here. Where were we? Where were we? This is, are we down here somewhere? Here, right? Old highs being broken, leaving an FEG behind. This now becomes a low risk buy here. But you don't trust the process, you don't trust the model. You're too afraid to take an entry here in the FEG that's a low risk buy in our opinion. Or this is the low risk buy and this is the first leg of accumulation. Look for market structure shift in here. Okay, you missed it there. Fair enough. FEG being created. There you go. Try it, take it to the left. So how many more or what more can I tell you for you to believe that you only need 2 models and 4 things on a checklist for you to enter into a trade? You need the zoom model or an entry model, and you need to have a market structure shift model. You need to couple it with confirmed entries such as ICT 2022 fair value gap entry models, which is there and there. Because at this point here, all the way down here, when we got the market structure shift story in here, we know that there's a change in the shift or the change in the state of delivery from here to there. Now this is partly one of the reasons why when we said at the time, in fact way before the time, this here is engineering liquidity, but at the time I think we drew it like that, right? That's liquidity there. It can stop here or it can take this here because of this here. So we can either stop here as before, or we can take all of this, come into here, and that be the 4, and then we roll over. We don't know yet. We don't know what this market structure shift is going to give us, because Market structure shift can be temporary. It can be more permanent. We don't know yet. But we're at levels now where most things have bottomed. So we're at places and levels where most things have bottomed. If we are talking recession later this year, whatever it is, then how much more is there to sell, really? So for that to happen, if I look at one of the tweets that Gio sent to me from David Bell, there's an uptick in the market in terms of banks, which means the curve has liquidity entering the market. And if liquidity is entering the market, this is why we're seeing all of this. We're seeing everything pump because there's liquidity entering the market. Now you
Well,
could
remember,
yeah,
remember too, markets aren't going to dump from bottoms, right? So
yeah.
we got
can't
the
dump
we
from a
got
bottom.
the
We can't dump from a
dump.
bottom.
Yeah.
We need to do bad things now. Bad things meaning we need to pump this market up in such a way that it looks extremely bullish. We've seen that before. We need to get people to shift their mindset that recession is over, the markets are now gone bullish again, no more selling is going to happen, and we're going to the moon. That needs to happen, which means that, just give me 1 second, I just want to look at something on TikTok. Is it not possible for price to come back to 19,200 before going further up? It's possible. I won't say it's not possible, but in the graded swing that we have here, I don't want to see price come back. You're saying 19,200 all the way down here. This is not something that I want to see happen here, because it means we're way off in terms of this being a 50%. And if this is a 50% like this, then it's a draw, a 50% of something larger, which could very well be, let's have a look here, where are we? Close this, open that. Something all the way up here, right? Or even lower if this is the 50%. So I don't want to see it come back to 19.2. That's not what we're looking for. Back to the bad bits. We need to pump the market in an irrational manner that gets people bullish, that doesn't give you many pullbacks, and just starts pumping, right? You tell me you haven't seen that before. Though this kind of pumping or price movement starts to create FOMO, because you're going to get to a point, and you can see the shit show on Twitter at the moment, where those who have longed are now gloating, and those who have missed the longs are still thinking recession, QT, bear market, whatever it is, right? Be the middle guy. If you understand or you can identify a shift in structure, go with order flow. Don't be a hero and try to short every high or every pump up. Don't be that guy. Order flow will dictate what happens. Order flow was bearish here, you should only be looking for shorts. If order flow is now trying to or wants to switch to bullish, to wherever it may be, maybe it's here, maybe it's still here. We need to be looking for longs until we are told or proven otherwise. Told and proven otherwise in this particular case here on a daily, or let's go 4 hourly, right? Would mean that FEGs being created are now starting to get traded through and closed through, right? Once we start to see that kind of shit happen, then we're not interested anymore. Also, if you look at H4, for example, I'd keep
Oh
an
God. We
what?
look at see now.
Let's have a look on the
It's
lower
dropped.
time. Yep, it's moving, right? So let's look at, so I probably got taken out here, that's fine. Let's look at H4 now quickly. H4, let's take this.
Can we invert this maybe, because we've been
You've been looking at it,
mentally looking at bullish charts right now.
yeah,
Maybe it like, because I mean you would probably look to long this now.
yeah. So
Once you trade above that, the big long green candle, the black candle next to it,
yeah, so this
I would
was
consider that my market shift right
this
there.
was down candle being traded through, right? And once we close above here,
Right, exactly.
right, and then once we trade through here, we start to get a bit wary now, right? So let's go down to H1, because this type of PA is not what you want to be seeing if price is going to go higher.
But also remember weekly closure, so there's going to be even more
Yeah.
fuckery right now.
Now I'm not seeing any. Okay, we have order block here, but I'm not seeing any imbalances up until here. So if this wants to come into any imbalances, then we look here. For now, we're okay-ish until we start to see other things happen, right? On M30, we could have seen this possibility here. There's your FEG here. So we know we had the M1 market structure shift here. Price pull back, sell. This could be distribution happening in here. And now, where does it want to distribute to is the question. On M30, we've got this guy here. So clear sell mode for now, because we've broken another low here, created FEGs inside here. We need to look for reversals or continuation in here. So if BTC wants to close the gap or close where it opened up for CME, whatever it is, it will start to give you hints up in here. I'm going to join the Discord and I'll answer over the mic. I'm just looking at inducement to be taken before a higher move. Okay, come and talk to me, Itzy. Right, so low risk sell, distribution. Where's the draw on liquidity? Could be here, into this FEG here. So this FEG, if it's retracement, if retracement 6 imbalance, there's order block here, and there's there's your order block, there's your FEG in here. We need to start looking for changes in the state of delivery on the lower time frames. Right, for now, what you would be looking for, in fact, I wouldn't be looking for it, I just watch it, is lows being broken, leaving FEGs behind. Start to watch them reject price as potential second leg of distribution and further downside. But the moment you start to see lower time frame order blocks forming in liquidity, so there's all your liquidity resting here, order blocks forming here in retracement, we can look for opportunities in the FEG in here somewhere, right? So it's something we'll monitor. I still I'm still looking for, not on this chart, we're still looking for a draw higher to the next level, which is 2024 something. Did I get rid of my to somewhere there? Other way around.
Yeah, so like on the week chart, Poison,
Yeah,
right,
let's
is
have a look.
there's that wick at 22.8. And if we close below that today after having swept it, right, like there's always this question of, okay, now when do we
Yep.
be concerned about that becoming a liquidity sweep for a reversal now the other direction? And
Right.
the
So
problem is with the weekly chart, it's so
it's so big.
long.
Yeah, you don't know what to look for, right?
Yeah.
So let's mark that off here. Talking that one, right? Let's go down to lower time frame. We've swept liquidity there. Does it hold liquidity is the question. Possible. Possible that it does. It's taken the liquidity of these two on the way up. There's still some imbalance up in here. So possible that we've swept this and come into the... I'm more interested in this, the next high, not that particular high, the one next to it. I'm interested in
Yeah,
this one.
right, because this one's not a true market structure
Yeah.
break, right? On
And
the
I'm
higher
interested
time
in
frame.
this one, right? So we didn't take that one, we took the one next to it, right? So I wouldn't be interested in that one, I'd be interested in that one there, which it did. Which it did. So the next few hours, weekly close would be interesting, right? Let's have a look. Remember, if this is still to go higher, then what you want to see next, like you saw here, the next candle opens, say it opens here. You want to see a wick down and then the continuation, right? Wick down and then the continuation. So 2 o'clock would be interesting. I don't think we'll do anything for the rest of the night in terms of trying to look for any entries, but we will be looking tomorrow, definitely. Either way. Also important levels is opening of the order block here. And this level here. Let's have a look at what that looks like. There. And then we have this massive FEG here on a 6 hour. Let's see if we can refine it. H4, H1. Probably M30. Yeah. For now.
Yeah, I think it might be good to look at indices too, right?
Yeah.
NASDAQ maybe to, because if
So
we have a
as-
bearish, we just need to be a little bit more cautious because
Yep.
we're gonna have endless trades, right? There's no sense being a hero
Yep.
trying to long here
No,
either.
no. You want to see a confirmed change in the state of delivery, right?
Yeah.
So, fair enough, we got a change in the state of delivery, but that was only to deliver price from here to here. Fair enough. Rebalance, redistribute, head lower. That's fine. Give me a second. We'll leave this to do whatever it has to do, right? This, the red being the weekly order block. Weekly, I think it is a weekly order block, right? Open. That's fine.
Yeah, we
Right. So not concerned yet for any of this. Indices, again, I'm looking for the draw on indices to be higher. This move down here, this move that happened down here, not convincing enough. Mainly liquidity grabbing all of this. What happened here was a change in the state of delivery all the way down here. Let's go M15. So this is NAS now, right? Down candle highs being traded through, FEGs being left behind, market structure shift, closing above there, retracement coming to rebalance, price moving much higher. Now, initially, if this was to go lower, then it should not, this was the box to hold everything behind. If we go in H1, was it H1? Hold on. M30. Here, right? Sorry. Here. This was what I was originally targeting for price to come into and head lower. But the change in the state of delivery that happened here, after all of this happened, was not convincing enough to say that it's going to end here. And remember, if the max pain scenarios, that if everyone sees this as resistance, or retail sees this as resistance, what's the more max pain scenario? Speed straight through it. Use it as support, carry on. This is TradingView platform. Now, if we stuck to the draw on liquidity being all the way up here, let's go down H4. Right, original consolidation all the way down here, expansion out of the range, so original consolidation here, 50% level here, expansion out the range here, expansion seeks order block. Where's your order block? Order block is up here. It has been here for the past 2 weeks. 11.9. Big wick here on the lower time frame, so 50% is the fair value of that wick. So we are looking for price to start to do that. Now it could come down, rebalance, and then move. We're not sure yet. We'll have to see. Wait for Monday to create the range, and then we trade on Tuesday, Wednesday. But the draw still being 50% of this consolidation range that expanded out. Right, so same inverse story of what's happening here. This is a consolidation range that expanded out. This expanded to an order block here. So we want this to expand to an order block here, or this big one here.
Can we look at the 50, 75, like where you would put those all based on that?
On this, yeah, sure. So if this was here and the drawn liquidity is here, all the way around. Let's say this was the drawn liquidity. This is there. So can you see around the 50% you had stop runs here? See
Right,
that?
after hitting the 75, we came down and
Yeah, so it could have been the 70 at the speed through the 50, stop runs at the 75. Let's call it that.
Yeah.
So we're not too far away from where we need to be.
so then ultimately higher time frame, like weekly pushing out.
Yeah, now
Tap into,
so
tap into that OB, come back down to the 50% of the range. Everyone gets bearish again, then we move up because we're still eyeing those, yeah, the IDM higher up, right?
there, that's it.
That one.
That's it. That's exactly it.
And that corresponds a little bit higher. Bitcoin moves a little bit higher. Everything dumps.
Yeah. So
Yeah.
this is why I say we may get a small retracement, but the draw needs to be higher. Bitcoin needs to follow suit and do that before the possibilities of this doing this, or BTC retracing as well, before pumping up again. So this is the draw. always been the draw. Had, like I said previously, if this was bearish, accumulation, failure swing, open liquidity run, push, then get it below the failure swing, this is not a valid zoom model until we do that, right? If we do that, then we back to the same story I just told you, where this, let's turn it around. This move up didn't take the failure swing high, instead it retraced, and then it did that. So let's do this instead.
Yeah, the other thing on NAS, all those bottom down candles, they're all green. I mean, yeah, they're all up
Yeah,
candles.
up candles is a problem.
This is why I'm confused. Too
Yeah.
many mix.
We'll make a lot of mixed signals, but we'll take it as it. If I can just remember where that is. Okay. Let's try and do a thing here. Invert it and figure shit out. Did I have to invert it? Hold on. Yeah, so I think we had this point here. Let's have a look. Yeah. Let's see if I can change this to actual candles as well. Just to try get the idea here, right? So didn't go below the failure swing here. Instead, what it's doing, that, and then it takes the failure swing. It opens up price to do that. So let's take away the fractal. Not going below the failure swing here, but retracing instead, and then we get that. It means we are opening up ourselves to do that before it does that. Same principle. The delivery is not what it should be. Now I'm only interested in how we can get from here to here. Once we come here, I'm out, I'm reassessing and seeing whether the market wants to actually push lower down to this level, and then seeing whether we want to hold this level and continue higher, or we want to do some of that other dumb shit that I just showed you, where we head lower like this and then we come and do this. This in itself is a big range. This was the 50. That's where it bounced off. So ideally we want to see it go higher, but for now I'm not going to anticipate anything other than from here to here, and then look for that. Depending on the order of the delivery, we'd figure out where we want to go next. Let's look at S&P. I haven't looked at it in quite a while. Let's get rid of some shit here. Right, I still on this inducement level here. We have the 50% level directly below us. We didn't come to it. Price went back into a previous FEG. Same story. So if we were to look at it, we'd consider this the original consolidation. Price moved up, gave us either the first leg of accumulation and moved away, or we are still in an accumulation phase because we are coming back into the FVG to dip for orders, right? Because if you look at how price moves, we have price moves out, gives us the low risk buy, moves away again, gives us the first leg of accumulation, could do that, moves away again and gives us the second leg, and then we get to objective. So as long as we are holding FVGs like these, we're fine. We're fine for upside. We'd be eyeing 50% of this wick becomes fair value for selling, or fair value there. Let's take this out in time and put an array on it. Right, so not overtly bearish on S&P either, because the draw, again, like I said, is still higher. The end game is always this, because we can't sell to new lows if we don't take inducement liquidity out the market. That's the high before the break of the low, inducement, and if we probably can find some order block that wasn't tapped inside here, right? Which is this extreme order block, but more so one inside here, there, or up here. So we'd be looking for S&P to give us that before we even see that. Now, does it want to move higher? We don't know until we start to get above these kind of levels. That's confirmation that price wants to go higher. For now, we're not interested in price going that high. We're only interested in how we can get from here to here. Whether it's going to give us that, or straight to that.
You show me the asset now.
What's up the light? Right, so once again, like I said, once FVG started getting traded above on lower time frames.
Oh, bro, this is why I can't get no comfort, bro. Oh, why did I? Oh, bro.
Hold on one second. Not too sure who that was.
What the hell is going on?
Yeah, someone that's not comfortable.
Somebody.
Who is that?
I don't know. I'm not. Can we look at the CRV?
CRV.
curve? CRV, yes.
Thank you, Al Dente. Yes.
Thank you, Al Dente. Al Dente, my friend. Let's go. Oh no, I don't have any CRV on the chart. There we go. I forgot we're looking at. Wait, what? Okay, this is old. Shit, I thought I had the chart inverted for a while. Right, so the plan for from here, or before all of the FTX shit that happened here, was always to get here, right? I think we've achieved that. So we can get rid of a few things. Let's get rid of that. Let's get rid of that. Don't know what this is, but we'll get rid of it too. And that, don't know what that is. Right, massive 2-year range. What are we doing here? We've taken the top of the range and the bottom of the range. We've got the 50% level that I was speaking about the other day. It's around 1.5, right? If this is to expand higher, entries will form at this level here for that to do that. So we have original consolidation, the 50% level, and if this is expanding higher, it now goes into price discovery mode. But we can't be too bullish or too bearish at the same time. We can be bullish from 150 to range high, at least, and then decide what it wants to do afterward. Does it want to go more sideways for an extended period of time? I don't know what CRV actually does. But at 150, I can be bullish to the range high.
The way I'm kind of looking at it, Poison, once we get above 150, we're also going to take that liquidity there, right, into that kind of bigger FEG.
Yeah.
That would, if we look at this as a swing, as an ICT model, we made a liquidity run, right? We haven't. We made a lower low, made a higher high yet on the higher time frame.
Yeah.
Right, until we get above that 150, 155, whatever, wherever those equal wicks are right there. Would we want to come back into the order block after that?
So the idea would then be, let's go weekly, because this is a lot of candles in here. Price moving away pretty fast. We traded through this level here, so we know that the structure has shifted.
We have push, right? Push to the left into that FEG, the higher one that you have. Then we have opposing liquidity run on the dump down.
Yeah.
And then now we need to make.
So what we actually need to do is, if this was accumulation, and this was failure swing, and this was OLR, we need to go for this guy.
Exactly. And then come back down into the order block.
And then once we come back below that guy on a high time frame, we're not talking sniper entries now. On a higher time frame, this would be the entry, 88, 87. That would be the entry. So if we can push for this level here, which is the failure swing high, we know that we want at some point, whether it goes higher or not, at some point we want to do that. And our entry must form around here. FEG in here, previous FEG acting as support now. So if we just keep this FEG out in time, even though there's another one in between, retracements would seek imbalance. So we'd look for that retracement to come into this FEG. And more importantly, let's do this, right? Let's balance the price range out, because we had two ranges like this. Let's balance it out this way, where we can say that this here, or even better, let's do this. This here to the top of this here becomes an FEG, right? There. So we're in sort of the level where we need to be to find the entries around 87, 88, up to 75. So because of the price action that happened here, on a lower time frame, you'd probably find that this may be balanced, or we consider this to be balanced, but this not, because of overlapping imbalances there on those two candles. The SIBI, sell side inefficiency, buy side imbalance, and the buy side imbalance, sell side inefficiency. Take it from there, take it through there. This would be the range that we would be interested in.
So the low being a green candle doesn't concern us, because that.
Right, on the low being a green candle, is it still a green candle on the daily? Yes, it is. But on a 12-hour, it isn't.
Okay.
It's not. It's not the best of order blocks either, but it's acceptable. It's acceptable. It means that on a daily, this is all a rejection block. That means if price, or should price come all the way back into here, it should reject. All we need to do is, if you on high time frame counts. If you're too afraid, do nothing. Wait for it to get above here and do this. Then figure things out here. This is now starting to close above this FEG here, right? So eating, because if this is to go higher, then all of this is on the menu. This guy, these, and this. Ultimately this. Now, if expansion seeks order block, where is the order block we can take? It's pretty high, right? It's here. $189. So for this to carry on doing that to 189, we take it. Because what's going to happen is the next monthly candle is going to go open up and go higher. And it's going to leave, it's probably going to do this now, right? Let's look at this. The next monthly candle is probably going to have a wick into this one. Whenever that happens, right? And then it's going to go higher. That wick is going to leave an FEG behind on a monthly. Expansion from here to order block. Retracement to imbalance. So we can work with that. We can work with that. 180, 187, 188. Break the failure swing high. Give us a retracement lower. We can work with that.
Can we look also in a smaller time frame?
What do you want to see on the smaller time frame?
Al Dente needs his 400, his 100x
Yeah.
scalp.
You need his
Scalp
100x scalp, so he has to look. So we could view this as a breakaway gap down here, which just leaves us with another FEG in here. Let's get rid of this one and concentrate around here. So FEGs at old highs become fair value. There's an old high, there's an FEG in here. Zoom in. Right, old high. You can use break. So we have what ICT has called a unicorn now, right? And I'll send you a video on that, because FEGs around breaker blocks, that's what you're looking for. There's your breaker block, bullish breaker. Coupled with the fact that we have that high time frame or weekly balanced price range FEG up just above us, we have an FEG inside a breaker. I'll send you the video to watch on that if you can find it. This is a unicorn, this is a buy. So if I'm looking at anything, then I'm looking at this. That's what I'm looking at. This FEG in this breaker. Make a note of that. Set some orders. What else do you want to look at?
Is it still, it's still bullish to go down there first before going to 189? Is that,
It's possible.
I mean, I know we
mean,
don't want to see that.
We don't
right,
want to
but
see that. We don't want to see that kind of shit, because it used a lot of strength and energy to get to where it is right now. And we don't want to start to see it do that. It could flash do that and fuck and go away. Yeah, that's a possibility. But like I said, you don't want lows that rebalance previous price being broken through. So for me, breaking through here is a no-no on going above, right there.
Yeah, then I have marked out right now for a buy if we get that.
Yeah, so we don't want it breaking and closing below this. This can come and rebalance, but we don't want retrace FEG, rebalancing FEGs being traded through, because then what does that become? That becomes market structure shift, which means we had, in this example, we had accumulation, failure swing, liquidity run, then we get something like that. It means this is a sell to there. So we don't want to see silly shit like that. So mark them off, even if you're not buying them, just mark them off for purposes. Right. Let's have a look at something here. 1 hour. This range was previously balanced here, so on the H1, starting to get rejection block vibes here, but I'm not even interested in doing anything tonight, to be honest with you. What I will do though is I'll keep track of this being accumulation, this being a failure swing, and this being the OLR, right? Then I'm interested in my entry forming here, lowest closing down candle before the run. I'm interested in my entry forming here, should it form. But, so that's if I miss anything down here on a low time frame. Entry forming here, 22,797. Unless we start to see something inside here that can give us something, we'd be able to enter before here. Once we break this, it's game on, right? Expect that and that. So for now, we do nothing. We do nothing but watch what price action is doing. I'd like this as a OLR and a zoom model. I'd like, to be honest with you, I'd like it. So tomorrow we'll watch. Could be tomorrow, could be day after. I haven't checked if there's any news or anything this week, so we'll check with that as well. But I'd like this to form something like that. Yeah, we'll take that. Because previously, what would we have said? Neutral triangle or WXY or something, right? Or in fact, we would have said A, B, C, X, A, B, C. So giving you W, X, Y, carry on. I haven't even checked any Elliott wave fibs on all of this, to be honest. We can probably check it now. So the word on the street is that this is some sort of 1. And a lot of people are putting the 2 here. I'd like to put it here. And we hit the, did we? We hit the double extension, so it is a perfect candidate for a wave 3 if it is. And if this is a wave 4 in here, then price should come back to 21. If it's not, then where's your next wave 3 candidate? If this is all subdivision, next wave 3 candidate, 25k. Coincides with around our 75%. We start to see silly shit like that, and then objective, which is 1, 2, 3, 4, 5. If we get that, then you can almost guarantee that you would get retracement into discount before you get that. because what does that do as well? As soon as we get above this, failure swing taken, 1, 2, 3, 4, 5 wave up, we're either going to be seeing the 4th wave complete and we get new lows, or we get retracement. Whether it's as deep as this is the question, because now you're starting to see a whole lot of balanced price action up in here.
So we go down now.
Down now. Now I don't know. Not now. We want to go up first, al dente.
Okay.
Number go up, then go down. Right, so it's a logical point for a wave 3, but is it a wave 3 complete? If it is, problems. It's going to come back down here. If it isn't, then it's going all the way up here, 25k, which is what we expect, right? The expectation is to go up there, then do silly shit around the 75%. This is the 75%. This is the top of a wave 3. Then do silly shit like that. Then do that. If it is a wave 3 of some sort, what would possible retracement levels be then? Let's have a look. PA Fibs puts this at about 61, so I'd say 30% retracement of this entire leg. Oof, let's have a look. Yeah, so it puts it back where it is currently now. It's a big sort of deep retracement, right? It means this is probably a 4 of the 3. We do that, then we do that, then we do that. So the idea was always to whatever trade taken in this price where we currently are at should always be closed around here at the 75, because this area here is the full of shit area. It's where price is just going to ping pong around. Even though the objective is up here. Don't get ping ponged. We've got this OB here, which once flipped sloth should serve as support. So a bearish order block should act as support. All PD arrays switchable, if you could say. Right. So nothing much more to talk about. Bullish for tomorrow, for the next few days, unless we're proven otherwise tomorrow. Like we said, we wanted to see gaps through the 50, below and above. Those should stay in the market until later on. That is why I said my expectation is not for this to come in full before going higher. It's to leave these gaps in the market. Trade higher and do all of the shit it needs to do at the 75% level, which is 25k here. Then do that wave 4 shit that it wants to do. Stops on either side, then hit the final wave up. So I think at 28k, around 28k, we need to be cautious and look for reversal signs there. But I'm not going to take any early market structure shift entries in here. I'm only going to take confirmed market structure shift and any retracements back into FEGs. Those I'll sell to at least 50% of whatever it is here. And what is that? It's exactly the FEGs left around the 50% level. So anything in here. Can we, let's do this now, right? If this is going to be a zoom model and the real low in the market before the move down gives us the lowest closing down candle as this guy. If we put that guy all the way here, so we take him here and we drag him across in time, this is where high time frame entry forms here, HTF. So what does that do? That puts us at the 50% level and an FVG around the 50% level in here. Extra confluence if you're more bullish. Right, not to say that it can't go lower, guys. It can go lower than what we spoke about. Hold on. It can go lower to here, but what we're saying is your entry should form around here. It's almost a confirmed entry. So we'll keep this level in mind as well. Yeah, that's it. Let's have a look at who's saying what in there. 3, 4, 5, 3, 4, 5. That's the light, yeah. So the light wants to see price moving down, and it is doing some silly shit right now. Let's see what we get by tomorrow. Not interested in now. I'll monitor it after the daily close today, and yeah, we'll take it from there. Anything else you guys want to look at? The light.
GBTC would be the only other thing because the structure is way different than Bitcoin.
GBT?
GBTC. I can buy that in my retirement account, so if we're going to be bullish after the next big dip.
So we'll monitor this tonight. I really don't want to be sitting and looking at a chart, but if this is starting to get more scary, then we'll close up and take something tomorrow.
Yeah. So it's GBTC. Reason.
Yeah, we'll look at it.
Okay.
Just give me a second. So I'm gonna look at something really quickly. Right. Where can I look at GBTC now? GBTC. Never looked at it before. Oh, this looks like shit. Looks like absolute shit. No real zoom model or anything for me in here. We're just back inside, back to an order block. How do you all even trade this? Or what do you all?
So I can trade it in my in the U.S. brokerage accounts, right?
Yeah.
So Schwab, Fidelity, TD Ameritrade,
Okay,
whatever.
so you have to look at these, but a high time frame.
So one of the big differences here, when you look at the weekly, this one didn't make a second high, the 60K top.
Yeah, I saw that.
1K top.
So
A lot of people are counting that as a 1-2 in the first high, and then all of this as a 3.
yeah, if it's a 3, fair enough. Let's take a look at a few things. Again, it's in a position or place where 3s are. Look at retracement. So double extension, that's fine. Let's look at it there. Pretty deep, right? 80+%. But we know that this has to retrace at least 30%. So this has to come at least here, 14, or fill this gap in here. And then go one lower if it wants to. So almost the same as BTC pushing up here, then rolling over there. Just don't know if this wants to go higher. It went pretty deep. Just tap the order block. Yeah, for me this is a bit. There is market structure shift here on the lower time frames, right? Price is going higher.
Yeah.
It's closing, it closed above here in fact, so that is another confirmation. Besides trading through the highs of previous down candles, order block confirmed. We just don't know yet because there's no, even on the weekly, it's very gappy and weird. Yeah, close above here, balance this price range out. So this could even be 1, 2, 3, 4, 5. So
Nico's
I'd watch-
asking about a
Sorry?
big running flat.
I don't know if this is a flat I'd take because this doesn't work for me. This has gone too low for this to go that high. So
Also, there's the whole Genesis thing floating around, right?
the
This
whole-
made a big move.
the whole
Might
what?
be the Genesis, the bankruptcy.
Yeah, Genesis bankruptcy floating around. So we don't know what's going to happen with this. This can do things that BTC doesn't have to do, right? Have you seen it? Have you seen this go down and BTC go up, or vice versa? I don't know how this works, to be honest with you. This
Yeah,
is
I've
like-
seen it go. It's pegged. It's supposed to be pegged to a value of Bitcoin,
Yeah,
and it's way below. We call the NAV, right? But it's way below that NAV, like 40% discount or something, maybe 35. I think it was greater than 50% discount at its low.
yeah.
So it has gone down when Bitcoin's gone up, but since the highs, it's basically gone down whenever Bitcoin's gone down.
Yeah, well, I don't know why on the monthly we already marked this off as inducement, so we'd be actually be looking for. It did tap the order block, but not to say that it can't come and tap it again in there. 5. So in a monthly bearish order block.
Yeah, I've always had one more low. I think I think Nico does too. So
Yeah, so makes you wonder. It can go a little bit more up before down.
make a new low when Bitcoin goes to 16, back to 16.
Possible,
Right?
yes.
This can still dump much harder.
Yeah, because this can also still go a little higher, like Bitcoin can, and then go lower than Bitcoin. Bitcoin doesn't make a new low, but this does. So this can still do this, and then this, when Bitcoin just does 28 to wherever, right? Yeah. I just don't like how GBTC looks. Looks crazy. Right, so this guy better start reversing, or else we could be round tripping from the weekend and barting back down, right? Things we don't want to see. So let's see what happens here. Tonight I'll monitor it. You all know that I don't get any sleep, so weekly close, very important. Let's have a look. So far, ugly wick into the order block. So remember, like I said, whenever the new week opens up, it's still gonna leave a down wick and then go up. That's what it should normally do. So whether this closes higher and then the wick comes lower, or this closes somewhere around here and then it heads lower, leaves an FEG behind. 21.8 or so. Let's see what happens there. Okay, gentlemen. I shall catch you later. This stuff is recorded. It's going to be uploaded to YouTube, and you can get the link there.
Thank you.
Thanks, boss.
Cheers.